Alright traders, it's Tony D here from Traderflow. Traderflow is a new competitions trading software that you can connect with any of your accounts already. So you don't have to open up a new account. You can connect with your live account. We're currently in the process of rolling out MT4, MT5. We'll be adding C-Trader, Match Trader, DX Trade, and Rhythmic and Ninja Trader soon. So Ninja Trader's the new version, taking over Trader 8 as well. So all those options will be available. But it is exciting times for us here at Traderflow. It's been a few years coming. The RBA has just come out and disappointed the market. The market was looking for a little bit more hawkishness. In terms of the actual commentary though, and the changes, we're only talking about 30-point drop, and the idea here is to be looking to buy this dip, right? You don't really want to be waiting too much time here for the market to pull back to significantly lower levels, because the general US dollar strength should be capped out this week. So if you're looking at the markets, the euro and the pound, although they are generally being a little bit dull, we do have the Bank of England coming up, and the US yields have been capped from the FOMC and the NFP last week. So the arm wrestle at the very least, right? So range trading to upside bias for me, but buying at the right levels is obviously key. Where's the right level here? Probably 80, 60, 65, 80, 65, 70. You can't get into too much trouble. If you go a little bit lower, maybe you can buy a little bit more. Market shouldn't really have one of those collapses that, when the risk is on right now. So risk being, China stocks and US stocks are doing quite well. If you're watching this inside our trading floor, you could be actually, if you are watching this inside our trading floor, you might be now. So trading floor is a 3D trading floor. You can come and have a chat with me in a little bit. I won't be live until later, though, as in being able to respond to you might create some feedback. We didn't really think about the inception level concerns that we have currently from sharing inside sharing. You can see that's using a VPS to run the sharing of that link. Now, I'm a professional trader. I've been trading for around 18 years. My name's Tony D. If you don't know me, before I'm an analyst slash dealer from Easy Markets for around 15 years. And so I did help a lot of traders learn to trade and try to beat these markets. Over time though, of course, it is very hard. Trading, it's not really about beating the markets, it's about beating yourself. The markets get relatively easy over time. It's the ego and your risk reward situations and your relationship with money, which is the hardest thing for most traders to overcome. So if you're trying to turn 100,000 into 200,000, that's achievable, very achievable if you've got $1 million in the bank. If you have only 100,000 in the bank and you try to turn 100,000 into 200,000, every time you play, you're playing with scared money. Pretty much because it's changing your expectations of what your future can be in your life. So I recommend the old adage 5 to 10, 20% max of your net worth involved in speculating. That way you can not have any sort of issues around what we call that scared money sense. If you lose it, you lose it. You really have to decouple your emotions as much as possible from trading. One of the ways I've been doing that recently is I've been taking these prop challenges. Now, prop challenges are where you pay a fixed amount to get access to someone else's capital. I have been doing quite well. They weren't really built for my level of experience though. I do have a $1 million account that I trade elsewhere at Pepperstone, which is an Australian broker, but this is, I think, a little bit more in line with the levels of your balances that you're watching here. And I don't really want to give away that level of alpha so free. Now the question will be, okay, Aussie dollar, where are we going to buy you? How much? What's your stop losses? See, this resistance is starting to form quite a large barrier here. I mean, barriers come in a few forms. Why is this now going to be pretty strong? Well, it's just because it's been holding so many times, right? Like, so that alone creates more chances of profit taking towards this level. Stop losses will start to build up above it, okay, but the Aussie dollar isn't really aggressive at the moment, so it's not like we're trading gold here or dollar yen. We would really want to get rid of some of this old text. Haven't been using this haven't been using this particular trading platform, as in this it's not how I do my trading, right? But if we're looking for where the market can pull back, one of the ways you can do that is just put a little fib on between the highs and lows previously. So I'm going to put a couple in. So we just basically want to buy the dip, right? We don't think the market's going back down per se, but we think it's going to pull back to just what a standard pullback, maybe a 23 or 38. Given that the market's in an uptrend, what I want to do here is get a little bit more space. Can I even do it? Probably. Alright, so in the way I like to trade is I like to think about what can happen next. So we buy here, that could be a 0.25, a little bit above, and the next level would be towards sort of the natural, what could be a natural up and down in a downtrend, right? So that would put us, assuming an uptrend, towards a sort of trend line support. So the way that the waves are built is basically what we're looking at there now. In terms of stops, I would be unhappy if it got below 65. I don't know if it's a worthy closeout situation. I mean, it would depend on why it got to 65. But in the current environment, if it did, I would be a little bit concerned. So the initial trading style here is to enter, and then the game is to see how it develops. It's likely that if it rolls over and rolls up, you can buy more as it's going higher. So we're talking about buying with a limit here, but what I'm really talking about doing here is looking to add to a winning trade as the price turns into God. Look what you gone and done. Look what you gone and done. So this is one of the templates I made. Color schemes just based off the website. What we're looking to do though is buy to. I'm definitely going to turn this into a white and green background. In fact, I'm going to go straight across to Pro Real Time, and we're just looking to buy green candles. Yeah, I mean, until we get back above 60, 66 towards 66, 20 and 30, then then you'll be thinking about closing out. Can you buy straight away here? Yeah. Is it a great trade? Probably not. It may work, right? But it's probably around a 30-40% chance of losing. And lower, you probably have a 20% chance of losing. So imagine you're playing cricket or you're playing poker. You don't want to play every hand. You don't want to play every ball. You want to wait for the best opportunities. Here's an okay opportunity, but unless you really have to trade, there's no need. The yields in the Australian forecasting, so the chances of a rate hike is lower now. And the price action on the pound and the euro isn't exactly anything to write home about, right? It's still consolidating. If it has a little stop hunt to the downside, then you'd be looking at the arm wrestle on the Australian dollar going lower. So, the straight back up is unlikely. It's possible, but it's unlikely. ASX is loving it because it's less than expected, and the Europeans, if they continue the cautiousness that they've been selling on rallies, at least in the short term here, then you could see the market rolling back down to 65, 80 quite easily in Europe, and that's where I would really like to play. If we're trying to pass prop tests, right? We're trying to make money here. The money game when you're doing the prop trading is all about taking those risk rewards, and so that's where the 65-80, at an 80% chance of winning. And when I say 80% chance of winning, I mean 80% chance of it going 10-20 pips in your way. It doesn't mean that it's going to go up forever. Still got to mind the trades a little bit, mind the way they develop. But the chance of it going from 65-80 to 66 at least, very high, very high. What happens then in the US session could be a bit of a problem. But we're just talking about that initial drop. You honestly, in the current setup, you want as much downside as possible without breaking the potential uptrend that's forming. On the radar, though, from the data point of views, do we have anything major coming up that we should be watching today? So each day, you sit down and you have a little look at what's coming up ahead. Not really. A couple of small data points out of Europe, but nothing's going to move the market there. France is on holidays. China sees in France. RBA has moved towards having a press conference each meeting, 3:30. What I'm going to do is I'm going to check in at 3:30 and see what they say around it, because the questions could be answering. What they've done with the RBA is gone from each first Tuesday to each 6 weeks, and now they're doing press conferences no matter what, if they raise or not. So it's a bit more like US, right? It's exactly like US. We have to see how much they open the door for hiking later. The questions will be around that. So that changes the dynamic a little bit on when we'd buy this potentially, if there is something worth buying. But I do like a nice sellout here towards that 65.80 or 65.90 in the next 25 minutes. Before the announcement, before the speech comes in, it would be very hard for them not to have some door opening for that rate hike. And then you'll have the ability for analysts in the coming weeks and days to talk about the divergence between the RBA and the ECB, and the divergence between the RBA and Bank of England as soon as Thursday, and the divergence between the RBA and the Fed, of course, being super important, with the Fed now still looking to cut rates if they get data that warrants it. They just haven't been getting the data they need. Alright guys, thank you for tuning in or watching this on replay if you do. We'll be back in probably 25 minutes there. Cheers.